Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about REITs. Should you buy them or should you just stay away from them? So I hope you guys enjoy it, and if you guys get anything in value, hit that like button and subscribe to the channel. And if you guys want to learn more about investing in the stock market, go ahead and check out my course. It'll be the first link down below. And the first person that uses promo code REITs will get 50% off the course, so make sure you go ahead and sign up. So now guys, let's jump into it, roll that intro, let's go. Bam! So now, what are REITs? Well, REITs are what you call real estate ETFs. So these companies will go out and buy different real estate properties. So they may go out and buy an apartment building. And then as an investor, you can say, oh, I like that apartment building. So you guys may buy a share of that REIT. So then what happens is now you guys are a little owner of that apartment building. So when the tenants pay their lease or their rent, you guys get a little bit of that money in the forms of dividends. And on top of it, if that's just say the apartment building goes up in value, just like the real estate market goes up in value, most of the time the share price will go up. So you guys can make money with the appreciation of the real estate or the share price, and you guys can make money in the forms of dividends. Also, by law, REITs have to pay 90% of the taxable income in dividends. So you guys can pretty much count on cash flow coming in from dividends. But over the past year in 2020, REITs have been absolutely slammed in value for a couple of reasons. The very first reason why is because unemployment rate is very, very high. And a lot of investors are worried that they're not gonna get any money coming in from rent. So if that just say a company goes out and buys an apartment complex, and then with super high unemployment rate, investors have the mindset, well, people aren't working, so how can I count on these people paying their rent? And so people will get worried that it's gonna have to come out of the company's money, and then that's overall gonna make those share prices fall. And people get worried and sell their REITs, which make it fall even more. So now the second reason why REITs have been slammed is because there was no incentive to actually pay your rent. Honestly, you were not punished for paying your rent. So if you guys missed a payment, it really didn't have any effect on you. You had to pay it in the future, but the apartment complex can't even evict you. So it's just like you're kind of just stuck there and you're living for free. So now recently a company came out and did a survey, and around 82% of people are actually paying their rent. So there's still a lot of people that aren't, but there's a majority of people that are actually still paying their rent. So now the third reason why REITs have been absolutely slammed is if that's a company goes out and buys a commercial property for a couple small businesses, and then there's a lockdown, and then these businesses can't operate, how do you expect them to pay their rent and their lease? Very similar to the apartment complex, but both small businesses. Then investors get worried and sell their REITs because of the lockdown, and then it makes it even fall even more. And here's the thing guys, there is still multiple REITs out there that have actually outperformed all the major indexes. So the Dow Jones, the NASDAQ, and the S&P 500. Ticker symbol EQIX is a data warehousing company that has actually outperformed everything. So it is classified as a REIT, and they actually own a lot of computing software for businesses to use, because I'm sure you know tech in 2020 has exploded because people can't go out, so they have to communicate online. So tech is just exploding in value. So honestly, if you guys are going to invest in REITs, there's a couple things you guys need to know. The very first one is make sure you guys completely understand what the company is investing in. So if that's just say a company is investing in apartment complexes, make sure you guys understand that apartment complexes could possibly take 2 years for that REIT to recover, but it possibly will, which is a very, very cool thing. But it's all about understanding all of your investments and doing as much research as you can. The second thing you guys need to understand as a REIT holder is make sure they have a payout ratio under 70%. So a payout ratio is pretty much a ratio of determining how much that company's paying in the forms of dividends. You want a company paying under 70%, so there's still enough money left over that they can grow the business. So if a company's paying a payout ratio at 100%, all of that company's earnings is going to investors. So how do you expect that company to grow? So make sure you guys understand that, at least check the payout ratio at least. And the third thing, the trend is your friend. So most of the time, if you guys are investing in REITs and the overall trend of the REIT is going up, you guys can just ride that trend in that wave up in value. But make sure you guys at least do some research, understand what the REIT is invested in, and make sure you guys understand the payout ratio for your REIT, because there could be better opportunities somewhere else, maybe in a different stock, or even maybe just holding it in cash. But in my opinion, I do think these REITs are going to take around 1.5 to 2 years to recover. I think it may take a little longer for people to be more comfortable going out, but it's actually really positive news that we got the vaccine coming out and a lot of other very, very cool things very soon. But the biggest thing, guys, is I want you guys to make sure you guys understand what you're invested in, do some research, understand the payout ratio, and honestly be diversified. If you guys think it's harder to choose individual REITs, Vanguard has a total real estate market, so you're diversified, it's a super low expense ratio, and you guys can count on dividend payments coming in. So if you guys are somebody who just wants to invest in REITs, I think Vanguard's total REIT market would be the best alternative for you guys, rather than picking and choosing different REITs. But I hope you guys enjoyed it, and if you guys did, hit that like button and subscribe to the channel, and we'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there. Have a good one, guys. Take care. Bam.